guess I'd like to start with an opening question and maybe observation. The world as we've seen it as drastically changed, and there's been a lot more collaboration. If we look at the Australian economy, Australian society, we've seen national leadership that has done two novel things with the response to COVID-19 pandemic. It really has crossed the federal state divide by forming this national cabinet and creating a national COVID commission. So in a way, there's been a very strong leadership at both levels. One can also call that there's been bipartisan cooperation and also the acceptance of science and listening to experts, which is maybe why Australia is sitting where it is sitting at the moment. And Europe is looking for the third wave, not even talking about the US. So there's been increased collaboration. We've gone beyond our differences, and we've really tried to build something that is meaningful and create an impact. Is that something that will remain, according to you? And are we going to be able to use that to tackle other wicked problems, to tackle climate change, to tackle social mobility for disadvantaged Australians and key social challenges? Who's willing to take that up first?
I could pitch into that and say that, unfortunately, I'm not super optimistic that it will remain, because as soon as, say, the pandemic situation in Victoria was brought under control, you have the same party lines emerging as they were before, with quite harsh criticism on handling the situation along the lines of interesting reasoning like, well, look, nothing happened, we were right, which it boggles the mind. But I hope the National Cabinet is something that will remain as a feature, but within the states, I'm not sure if it will provide any kind of a step change towards more collaborative government. I kind of doubt that.
Then can Alex or Andrew, are you sharing the same view, or do you have more optimistic perspectives on that?
No, I see it pretty like Sami. I think what was nice, the fact that we experienced this collaboration showed at least there was some testing. But on the other side, still with social media and the emerging populism on both sides, I think we fall pretty quickly back in the old patterns where we basically politicize for our own, irrespective whether it's on the left or on the right side of the spectrum, basically for our clientele. And that's a phenomenon that's not only happening in Australia. We see it everywhere. And I'm a little bit sad. I'm a big fan of the debate, and you don't, and I can have some of Andrew's points he brought from the post on neo-capitalism. We're going to talk a little bit later on as well. We may not see everything the same way, but at least there is a debate, and we listen to each other, and everyone corrects, and we may end up in a compromise. And the golden compromise in our life, whether it's in the private life, that's what happens and what matters. And I think we are very often very far away from a compromise. And in a lot of European countries, you have a center as well in the political system that forces the left and the right side to come a step closer to each other. And I'm really appreciating that. I really, it makes me a little bit sad that we see that less often happening, and because the center disciplines both sides to talk together and to basically go for a handshake and follow some ideas that may come from another political spectrum or not. And this is why we don't have that. We have a bipolar system, and I'm with Sami. Unfortunately, I'm not sure whether we can save some of these great achievements over a longer period of time, what we achieved during the pandemic.
And in terms of...
Perhaps I could just reflect a bit on this. After 7 years, we returned about 6 months ago after living 7 years in the UK. what I want to say, reflecting on the environment there and what's happened here, is that the National Cabinet and the cooperation across party lines and across state lines that we've seen with regard to how to deal with the pandemic in Australia puts us in a much nicer place, if I can use the word nicer, or better place than many other parts of the world, where we have really, to a degree, I think, demonstrated a deep sense of society, if I can use that word, or a deep sense of society that has crossed the individualism that often, polarises people, and we've been able to actually work together more seamlessly as a society to kind of deal with the pandemic itself and the issues that it's faced. So to me, that's a very encouraging sign in this country, and in fact, one of the reasons why I like being back.
Duncan, do you want to build up on that, or maybe share thoughts about the benefits of cooperating to address the big societal challenges to fight climate change and to move forward and towards this new reset?
Yeah, I guess the comment I'd make is I'm a bit more skeptical on the notion of reset, or the notion that in a post-COVID world we're going to be better than we were before. What I guess, and this is just me putting my enterprise hat on and thinking the large majority of our economic base, our GDP, our workforce is centralized around obviously the markets we specialize in, so mining and exports, things like that. But in order to survive this pandemic, Australia, like most other countries, has instigated significant financial incentives and put up financial policies to ensure, obviously, those who have lost work or couldn't work because of lockdown, things like that, don't fall under the radar, right? And our M1 money supply has increased by about 55% since February globally, right? We're printing more money than we ever have before, right? Foreign demand for US Treasury is also at a decade low, right? Which for those who are familiar with global economics is cause for concern, right? So what I'm conscious of is the utilitarian debate is great, and I think there's room for some improvements in the future, but I think the bigger concern is we're going to hit probably quite a significant reduction in economic activity globally. We're all going to go back to our little countries and homes and try and rebuild, and all these incentives are probably going to be pushed to the side burner a little bit, because the more pressing issue is how do we get our economy back on track? And perhaps that is, to Andrew's point, converging the kind of not-for-profit profit sector and creating new businesses that can bridge that gap. Perhaps that's a solution. But I think what's in my mind, what's most likely is we're going to revert to trying to do what worked before, right? Trying to do the things 10, 20 years ago that made us money, or 5 years ago that made us money, and see if we can recover like that. And I think that's going to cause a whole bunch of problems. And I wonder if this is going to push this debate about making things better to the sideline again.
Alex, I see you definitely want to respond to that.
Duncan was nice and built a bridge to economics, and I would probably like to share a couple of slides and just to give you a little bit an idea with question marks. So I have probably 4 or 5 charts from economical charts that give a little bit an idea and has to do with the trust in the system and trust in the government. So I think quickly go share. Can you see it?
Yes.
That's a chart, and I think that's a chart that shows probably the last 60 years pretty much. We call it the World Uncertainty Index, and it shows a little bit what happened over time. We tend to forget that. We always operate a little bit in the cycle we are. What is important? In the very old times, the moderating factor was interest. So what did a reserve bank do? Let's assume the reserve bank and the government are completely separate. That's what we aim, but that's what's not the case anymore, even if everyone says it's the case. They are highly politicized weapons today, the RBAs. In some countries, more obvious, in some countries, less obvious. whether it's strong statements from a Trump and then a Powell who has to deliver, or a Miss Yellen or whatever. That's one of the big problems. So we see over time what happened. And until the global financial crisis, probably a little bit something before 2005, we call that a little bit, that was the Greenspan time. Basically, we had an ever time lowering interest. The interest got lowered and lowered over time, and basically more and more became affordable for a larger crowd of people to buy assets. Don't forget, interest rates is basically the price for money, and it should help to allocate resources and capital in a proper way. That's what it meant to be, in our system. When we go further, and I just quickly go, now we have this effect here, and I say, what is the lockdown measures and the impact? We look a little bit now on the COVID. What's the impact on the global GDP 2020 by region, and how did people feel? We see China had in March the biggest one, nowhere, and then basically it dropped back to zero. China is almost back to normality. North America, they are quite close to normality as well. When you look at the different GDPs of the states, you see only Hawaii and Nevada suffering heavily, because these two are highly depending from tourism. The rest does quite well at the very high cost. Let's be honest, at the very high cost. So, and this is why I would put a big question mark there. Western Europe, similar pattern at the moment. But then we start to see a lot of rest of the world, Latin America and Asia Pacific overall, and that's not only Australia, a little bit less. And it shows globalization, where a lot of people profited in the expansive mode. A lot of people who profited are suffering now from the system here, whether it's in India, whether it's in other Asian countries. And I think what is probably really important to see, and that brings it to the point, that shows us the balance sheet of the Fed of the United States, the Federal Reserve Bank. And we basically see here in 2008, the big jump of the balance sheet, because the interest rates here, we see declining interest rates over time. These are the blue lines of the treasuries. So interest wasn't used anymore as a tool basically to moderate or to allocate capital. So the governments or the reserve banks had to start with quantitative easing and buying back stock in the market. It's basically, they jumped in and started to buy, and basically to buy into corporate debt, into municipal debt, and to buy shares as well. Here the big jump was the financial crisis, and we thought by then it's the biggest ever. It continued basically after the financial crisis, further expansion, even more. And all of a sudden, when the Americas started to kick in, they started to delever the balance sheet. And just now have a look what happened here with the pandemic and the reaction to the pandemic. It jumped up to almost 35%. And that's this picture we see here from the Fed is not indifferent if you will look at the balance sheet of other reserve banks. So reserve banks and the politics, we said inflation in the past is the big risk here, and it still is the big risk, inflation, and we don't want to have it. How did inflation get compensated in the past? Through productivity, through outsourcing, through globalization, basically through everything, because we could get more power at a lower price. This is why the products and all the resources stayed relatively cheap. If we start to roll back globalization at the moment, if we start to lock down ourselves in our countries, we may see inflation rates like in South America in the future, even in our countries, because in Venezuela or in Ecuador or in Argentina, countries that are not that closely linked to the global supply chains, like Europe or Asia or Australia or the US, who can compensate basically through productivity increase, digitalization, and international trade. These always increase in cost, because none of us wants to have a lower salary in the future. None of us wants to live in a smaller house. So if there is not globalization to compensate for this sheer expansion, the willingness, and it brings us back to maybe what Andrew said, we need to accept, we need to live with less, lower salaries, less luxurious life, etc., if we want to do that, but no one wants. And that's basically a little bit the problem we are dealing with. And here we see government bonds, you see the same here, increasing risk of the government bonds because more and more debts. We saw it with New South Wales and Victoria, getting notched down to AA+, and it will happen in other countries as well. And less return. Our whole system, our whole aged care system and our social security system is based on the expectation that we generate return for our future rents. No surprise, the global creditworthiness of all the different companies. Have a look, AAA, almost nothing anymore. More and more BBB. Just to let you know, BBB, here we are at 20%. That's what is deemed as investment quality. Our super funds are not allowed to invest in double Bs or in single Bs or in Cs. That means we have more and more debt. And that is really what worries me. And when we compare here now, what Duncan Cameron said earlier as well, we have basically it's not attractive to buy bonds anymore. On the other side, everything pushes up the shares because people, they flee to a place or to an asset class where they can generate returns. And this brings us back, those who own shares, either directly or through their super funds, they profit. A large part of the population who doesn't have shares, they don't profit. It's unfortunately an outcome that penalizes the people who work and who don't have shares and benefits those basically who have shares. Whether it's right or not, at the end of the day, it's the question about the capital allocation and the price of capital. Vigenda, we help businesses who can't get the banking finance. We help them to finance. We are like a small investment bank. We do 5 to 50 million. So typical small, mid-sized businesses who don't get capital from a bank because of the Basel regulation, they come to us and they get the capital cheaper than if they have to raise capital through an equity increase or a share capital increase. But the whole thing that's happening at the moment pushes us back as well, because the normal banks get overpoured by capital so heavily that no one comes to us anymore, because the Basel rules that were meant to stabilize banks at the moment are almost set out of order, because there is by far enough capital and everyone gets money. We are again at the beginning of a very big bubble if we don't want to correct it, and no one wants to say it. That's in a super short nutshell, a little bit, an economic feedback, what's happening. So the absence of interest, quantitative easing, the government and the reserve banks and the governments that basically completely, they are fully connected and not independent anymore. And that brings us in a really bad position. And that's scary. And I think, and on the other side, when we oppose globalization on top, we will see inflation in the future. And this inflation will be very at our detriment and will probably cost. And that's basically, we thought in the last 20 years, inflation doesn't exist anymore because it got offset by globalization and productivity increase. But if we switch that off, inflation may be alive again. Sorry. A lot of information in a short window. Sorry for that.
But I think that's a good summary of the increasing state of divorce between the capital markets and the economy. And in Europe, we saw where inflation led us some 67 years ago. So hopefully no one wants to get there. But I saw, Duncan, that you were interested in responding to some of that.
No, I was just going to say that was far more eloquently put, Alexander, than I could put it. So thank you. But yeah, I guess the reality is, and I think Alexander said it quite rightly, is no one wants to talk about it, but we're at the brink of seriously catastrophic economic implications globally. And so I don't want this whole discussion to be on the economic cliff we're about to jump off, but I think we need to recognize that it's going to be a serious constraint on any of these other things we want to do in the next few years. And whilst the mentality might be good around how do we build a better normal, we need to solve this economic problem, because whilst governments have implemented a lot of policies, if they lose control over their financial markets, because the RBA doesn't have the power it used to, there's a lot less they're going to be able to do, and we need to recognize that. And perhaps that means there's a far bigger role for private enterprise to play than perhaps ever before.
Mm-hmm.
Can I just ask a question in terms of the cliff that we're talking about and the crisis that we're looking at? Who will be the beneficiaries of that? Who will benefit from it, and who will be the losers? In our post-COVID world, who will benefit the most and who will lose?
I'm not sure if you want to go first, Alexander, but I
would say those who have a lot of debt will be beneficiaries, because inflation destroys in some form assets and has an impact on the purchasing power of consumers. But those who have debt, it basically helps to depreciate debt as well. So and that will be most likely the tool over time, whether it's going to be sharp or a little bit softer, that will actually help basically to reduce this high level of debt. And most of people of you who were in Australia here, let's say 25 years ago, we were used to have interest rates of 15% per annum here. And the same applied to Canada and I remember in the UK as well. And now the Reserve Bank rate is at 0.1%, since Melbourne Cup Day. No one could have imagined that Australia, that is basically deemed rather as a high interest country with a relatively volatile currency that is highly dependent on the commodity price, would ever land there at the 0.1%. So the beneficiaries, those who have debt are beneficiaries, and those who don't have, and now we are back again, Andrew, it's highly unjust. It's not unjust on purpose. First of all, you drive the share prices and everything up because we don't have an alternative to invest anymore in the low yield environment. You may profit a little bit through your house when you are invested in the housing stock, because a lot of people get mortgages relatively cheap and can buy houses, and housing affordability is higher. And that doesn't only apply to the Toorak or the Brighton Manors, it applies to the cheaper locations in Melbourne as well. But if you don't have any assets and you're just depending on a salary, the current system, how it is in place, and the whole policy making penalizes those who work, first of all, and those who don't have debt, secondly, after the cliff. We are all lucky that we have superannuation. We may profit through the superannuation sector, but the whole gig economy and the millennials who may not even have superannuation because they have their little job somewhere else, they are not capable of building wealth in the current environment. And that's sad as well. That's another issue. These people will land immediately into Centrelink in a later stage as well, because they won't have a pension. I'm a Gen Xer, the baby boom. You're probably a baby boomer so you had a chance basically of build wealth over time, whether in what amount, irrespective, whether it's in housing or with a house. Most people had a house and then they sold it, got some equity, a new house, sold it, got more equity, and they built some wealth. But today, if you need to start today, or you are 15 or 20 years old, not so easy in the current environment. I think even I'm quite negative from an outlook perspective at this age.
Which is why, in terms of our focus on a fair and just society, I'm saying if we can identify the people who are going to lose, what can we do? What are the things within our economic or political system? What can we do, shape within the whole world of finance and everything else, so that those who are going to lose don't lose perhaps as much as the system
there are recipes, Andrew, sorry. There are recipes, but no politician wants to get a bloody nose there. One topic is the superannuation system benefits the baby boomers. Why? We basically say they were individual savings, they should have the individual fruits. And even with the normal state rent systems, basically there should be a redistribution from the old people to the younger generation. But no one wants to do that because they are voters, and they are powerful voters, the baby boomers as well, you know?